Rising inflation, rising housing prices, not so rising salaries make it seem like you can't buy a property ever. First, let's make a deal. If I change your mind or you learn something new by the end of the video, you'll like the video and subscribe to the channel. Deal? Shake on it? Okay, let's go. So since we made a deal, I'm gonna help you figure out how to buy your first property, because to be honest with you, when you buy your first property, everything after that, it becomes a little bit easier. So go ahead and grab a pen and paper, because there's gonna be a lot of things you wanna write down. We'll break this video down in two sections: finding and financing. Obviously, the first thing to do is to find a property you would like. If you've never heard of MLS, that's a real estate agent only website for properties for sale.
Ralph, I'm not a real estate agent, so this doesn't work for me.
Well, okay, yes and no. You cannot access things that are posted directly on MLS. However, you can access websites that actually synchronize all the data from MLS to their website. So for example, Zillow, Redfin, Realtor.com. Everything that gets thrown onto MLS gets thrown automatically onto those websites. So let's say you listened to me, you went ahead and found a property on Zillow that you like. So you found the property you like and you click, let me contact this agent. Please don't. What will happen? You will be connected to a random agent that knows nothing about this property, and they will try to represent you in this deal. And honestly, you're gonna go down such a rabbit hole that you're gonna be like, screw this, I'm just renting. So instead of clicking this here, you're gonna scroll down until you see the name of the agent that posted it and their phone number. Call that number. That is the only person you want to talk to, because that is the agent that actually has the listing. Okay, stop. Something that I've noticed nowadays that I did want to share with you guys. After calling multiple Zillow agents, I've realized that agents are not that nice. Not nice is a YouTube censored way of saying it. Not all of them, of course, but most of them, to be honest with you. It feels like you're a burden to them when you call them. It's like, oh, what? How dare you call them and try to make them money? You would think the opposite, that they would want your money, but that's something I'm never going to understand. Don't let that get to you. When you call first or second agent, if they're not that nice, keep going until you find the property you like and the agent is going to be willing to help you. Because there are agents out there that want your business. When you talk to them, let them know that you're very interested. And this is very important. Take note. Let the listing agent know that you're not being represented and you would like them to represent you in this deal when you make an offer. So now if you're in contact with a good agent, they're going to guide you through the process of making an offer, through the title process, and through the closing. Okay, stop. What if I just told you that everything I just taught you didn't have to do? There's actually one easier way to go about this. You can actually hire a buyer's agent who will be in contact with agents for you, who will make offers for you, and they will guide you through the entire process.
Wow, Ralph, this sounds so easy. So why the hell did you waste my time explaining everything else?
Okay, guys, relax, okay? I promise if you stick with me, you'll understand exactly why I was teaching you what I was teaching. So this is the moment I actually kind of hate on real estate agents. So if you're a real estate agent, you want to close your ears. Okay, I think they're all gone. Come closer. Most of the real estate agents are on the lookout for themselves. You might say, well, there's nothing wrong with that. Yes, there is actually a ton of things wrong with that. Agents, when they get their license, they actually take enough that they will be working in the best interest of their client. Thank you. Thank you. Okay, I'm just kidding. Not all agents are that bad. But how are you gonna know if the agent is good or bad when you're working with them for the first time? Well, maybe references can get you there. Maybe you have a family member or a friend who is a real estate agent that can help you through the process. But let's say you don't have anyone like that. You can actually put yourself in such a better position when you don't work with a buyer's agent. Especially if this is applicable in a lot of areas where it's very, very competitive. When you tell the listed agent that you don't have a buyer's agent working with you, a light bulb clicks in their head. I can potentially make 5-6% instead of making 2.5% from this deal. Because normally the seller pays 5 to 6% for the entire real estate deal to go through, and it's split between the buyer's agent and the seller's agent. Most of the time in the middle, sometimes the seller's agent take a little more, but it doesn't matter, it's still split. But when you tell an agent that you want them to represent you on the deal and they're going to do that, it means you're doubling the salary. Most likely they can make the seller's agent side and the buyer's agent side. So trust me, they will go out of the way to make sure that you're the one who buys the property. You're doubling their salary, so can you really blame them? I honestly have even encountered sometimes that agents don't even present you deals if they don't like you, which technically they're not supposed to do. They're supposed to present to the seller every single offer that comes on the table, even if they think it's ridiculous. But like we said, not all of them follow the rules. First rule that we'll learn today is start by finding your own property. Some other options where how you can find property is Facebook Marketplace. website. It's super easy, and a lot of times you're dealing directly with the sellers without any agents. In this situation, you might say, I don't know how to write contracts, I don't know how to do anything, right? Determine the price that you're willing to pay for the property. If you're willing to pay the seller's price, if you want to negotiate a little bit lower, then after agreeing with the price on the seller, contact a title company in your area. Google reviews will be your best bet here to find the best one. Ask the title company to even guide you through the process. See if they can send you a contract. A lot of times they can do that because they even have real estate attorneys on their team. So you can get most of the time better deals when you're doing directly through an owner. I understand there's a lot more risk that comes that way, so if you've never bought real estate before, so this step will take a little bit more research because you have to understand how to make offers, how to determine value of the property. So if you're willing to take a little bit more time but do it that way, I think that's a good way to go about it. Alright, so we found the property you love, whatever you found it, now it's step number 2. Just for the sake of this video, let's say you found the property for $300,000. Let's get you the funds for this deal. But actually you're not gonna need $300,000, right? So how much are you going to need? $80,000, $100,000, $40,000? Well, that depends. You actually might need only $10,500.
Okay, Ralph, $10,500 is not a small amount of money.
Yes, I know, but it's actually much doable than you think. And if I'm being very clear and honest with you, that's $10,500 for the down payment is not gonna be enough. You need an additional $5,000 for the closing costs. And maybe have a couple $1,000s in savings for repairs that you might need to do in the house. So I would say you probably need about $15,000 to $20,000 in your savings to be able to purchase your first house. If you don't have this kind of money, don't worry about it. I have an option for you later in this video. First of all, some of the states will actually let you finance some of that down payment with a 0% interest. Florida, for example, gives you $7,500 for that down payment at 0%. So go ahead and look up the rules for your own state. So let's just say you got approved for that $7,500. So now the only thing that you have left is another $7,500, which isn't truly impossible. If you save within a year, you're gonna have to save $625 a month. If you save within 2 years, you're gonna have to save $312.50 a month. Alright, either way, I'm not here to teach you how to save money. That you're gonna have to figure out on your own. FHA loan, something that a lot of people hear when they buy their first property. But is it the best loan if you're buying your first property? FHA loan is good in 3 situations. First of all, if you have a really bad credit. Second of all, if you actually have a high debt to income ratio. Looking here at FHA website, debt to income ratio could be all the way up to 43%, which is actually really high. Your credit score needs to be at least 580 to put 3.5% down. And third reason why this loan could be really good for you if you're buying a multi-family home as your first time purchase. Everything is super cool with this loan. You get the lowest interest, you get the lowest entry point to this loan, but there's always a but. You will have to pay PMI for the lifetime of the loan. What's PMI, you might ask? PMI is mortgage insurance. The bank is saying, since I'm letting you put down only 3.5%, I'm going to go ahead and charge you a monthly mortgage insurance, and let's say I'm going to protect myself that way. Like they really need it. But that's the rules. The cool part about this loan, you do get to put down 3.5% down when you buy a 2 to 4 unit property, if you're obviously going to live in one of the units. Because the next best loan, which is conventional loan, you have to put 5% down. I would say if you're buying your first property, if it's a multi-family property, or you have really bad credit, or you have too much debt, I think FHA loan is the way to go. So now let's get to a conventional loan. If you're buying a single family home for yourself, you can also put down 3.5% down. The difference with this loan that it has a little bit of a higher interest rate, anywhere between 0.75 to 1%, which adds up to about $100 to $200 extra payment a month. The greatest part about this loan, you can actually tell the bank to stop taking your money when you have 20% of equity in your home.
Stop it.
What I mean by that is that after you have 20% equity in your home, your PMI will drop and you will not have to pay that anymore. Okay, there's one more loan that I want to talk about, is the VA loan. Okay, this loan is probably not going to apply to most of the people, but it's a great loan to talk about. If you or your family member have ever served or you're in active duty right now, absolutely go for this loan. There's no other loan you even need to look into. I mean, these people risk their life for this country, so I think giving them good terms for a home loan is the least we can do. The lowest mortgage rates, no PMI, and no down payment. The best loan out there. Okay, let's skip all the loans. Let's say you are like me 3 years ago. This was me right here. I didn't have any money. I had an okay job. Well, actually, by the time I'm recording this, I lost my job. But I had no money down. I didn't know what to do. And let's say if I really wanted to buy a property, what could I do then? Could I have went for one of the loans that I just mentioned to you? Absolutely not. No one would have taken me. But there's one magical phrase that I'm going to give you. Owner finance. Here will be very technical, so buckle up. Let me explain to you very quickly. You can make this work with on-market property that are listed with real estate agent or off-market that you find on Facebook or Facebook Marketplace. Owner finance is where the owner becomes the bank. There are a lot of things that come into place when it comes to owner financing, but here are a couple things, couple of questions that you should ask before even considering this option. Would the seller consider owner financing? Does the seller own the property free and clear? It means that there's no mortgage. What is the down payment the seller would consider if they would to sell owner finance? What's the interest rate that the seller would consider if they would to sell it in seller finance? How many years are they willing to give you before you have to pay it all back? Obviously, for all this to work, the answer to the first two questions has to be yes. The last three questions are where you can play around a little bit. The seller might ask a down payment that's actually higher than what the bank would want. I'll tell you a story. Recently, I encountered a property that the seller wanted 50% down, $875K property. So when they told me that, I said, well, man, you have a great day. If they want a higher interest rate than the bank, it might not work as well, but if they want like a very low down payment, like 1% or even 0% down, then this might be a good option. And they have to be willing to give you at least 3 to 5 years to pay off the property.
Wait, Ralph, so I'm confused. So I'm gonna have to pay them $300,000 in 3 years?
No, not particularly. Let's say you bought the house with owner finance for $300,000 with 0% down. Within the 3 years, you're paying your monthly mortgage payments like you would do to a bank. And after 3 years, you pay off $30,000. So after 3 years, what's left is $270K. So by that time, what you have to do is go to a bank and say, hey bank, I have this property, I would like to refinance out of this property. So what they do is they refinance it, give you money, so they give you about 75% of the value of the property, so hopefully you do have that equity in the property. So now if you were able to refinance the property, you paid off the previous owner, now you have a property that's refinanced and you're paying the bank every single month like you would do if you had a regular mortgage. I know that was a lot, and I know owner finance is not that simple if you've never heard of it, but I promise you, if you do a little bit more research, it actually makes a lot of sense. If you want me to make a video about it, leave it in the comment down below. I'll be more than happy to. Promise you, all this work is worth it. If you buy your first property and you buy it right, you will be very, very happy because all the equity you can gain on it, especially if you bought a multifamily property, you can be collecting rent, which is absolutely fantastic. Another thought that I had is to teach people how to buy right. What does that mean? So if you're interested, let me know. All right, so what do you think? Did I hold the end of my bargain? So if you think that I did, please leave a like and subscribe to the channel. Check out the other videos as well. I make a lot of real estate content. Hope you enjoyed this video. I see you next time. As always, peace.